Good morning, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a great start to your week so far. It is Monday, so happy Monday, everybody. Today we're going to be diving into our daily cryptocurrency market update, and we're going to be really telling you guys what to look out for moving forwards this week, also discussing the market where it currently is. Right off the bat, we're going to be looking at our kind of long-term chart for Bitcoin, where we're currently at and where I still think we're going. My bias is still, and I'll say this right from the outset, to the downside. You know, everything that's going on right now, the risk is still very much to the downside. It's not what people want to hear, but it's what the play is at the moment. And until that changes, until I see some sort of change from the Fed and other global events, you know, my bias isn't going to change. And you've got lots of people at the moment looking at on-chain data and calling from for a bottom, as we've previously bottomed. I don't know what on-chain metric it is they're using. Not a good time. What we've seen over the past year is on-chain data having less and less and less and less of an effect. And I know this firsthand as somebody that's followed it and actually many times based a lot of my theories around it. On-chain data just simply does not have the potency that it once did. Certainly not in a Fed rate hiking cycle. And for those of you that didn't watch my video yesterday with Francis, well worth a watch, guys. You will learn more. I know it's an hour and 20-minute long video, but you will learn more in that 1 hour and 20 minutes than years of watching these other YouTubers. I can guarantee you that. Well worth a watch. But that being said, where are we at? Well, we're going to look at it. We'll be pulling up 3-day. We're going to be looking at some comments made recently. And remember, guys, Jerome Powell is speaking on Wednesday, where Jerome is now essentially coming out and going, look, soft landing, actually, we can't guarantee it. And now he's sort of saying, look, it doesn't really look that likely. And to me, this has always been the play. How can the Fed guarantee a soft landing, upping interest rates in the kind of aggressive manner they are, monetary tightening in the aggressive manner that they're doing, with the economy, you know, already slowing down, and we've never had so much debt. You know, it's a perfect storm in the sense that it's going to be a bad one, I reckon, that we're probably moving into. And I will be talking about where we're at with Bitcoin and what we're currently doing in terms of trading it. I opened some very small shorts. We did keep you guys up to date on our Twitter with where we were shorting in this kind of green box. We got tagged in on a few very small shorts. But for me, I'm not putting any big size on shorting this market just yet because it's not high probability for me. You know, my exit and entries aren't really there. Or my exit and invalidation points aren't really there. And really, you know, if I was to start putting shorts on now, I'd really just be hoping that the price was going to go down. You know, the setup hasn't quite yet presented itself, but we will talk about that as well. We'll also talk about how, you know, not only do we have Jerome speaking this week, but we've got the retail earnings. Job market is something the Fed is using as a lever or as leverage to essentially do what they're doing. You know, they're saying that the labor market is very tight and, you know, the economy is doing well. So we're going to, you know, we've got the kind of leg room to stretch out and really go ahead with these interest rate hikes. We'll also talk about how the Asian market somewhat down today. And I'm also going to talk about CPI because we had a lower CPI print, which, you know, markets I think didn't take any relief from just because it was not significantly lower. 8.3% inflation is still horrific. I did expect markets to get more of a bounce than they got off of that because what I thought that would indicate was that inflation may be peaking and that this may all come to an end sooner. But in actual fact, my hunch is that inflation actually comes out higher next CPI print. And the reason for that is because I watch all commodities. They had a dip. CPI print came out slightly lower. They're now starting to come back up. I think that's going to affect CPI to the upside. And we've got confirmation from FinTwitter pricing that in and a number of other things. So let's get into it, guys. We've discussed a lot of what we're going to talk about already. This is what we're looking at. We're looking at these long-term regression bands for Bitcoin. I'm saying you're at least going to get down to your 24K range, the lower band, like you have done every time previously in Bitcoin boom and bust cycles, we'll call them, expansion and contraction cycles. And essentially, this is where I think you're going to go. I think you're looking at downside, and right now the lower band is around about sort of 23K. I think that's absolutely possible, and in actual fact probable, given everything going on at the moment. Of course, that's going to spell off more downside for crypto. A quick comment again on people looking at on-chain analytics. Okay, well, we're thinking that the stock market, and again, that video is well worth a watch yesterday because we pull up a number of targets for the stock market. we're looking at the stock market and we're saying, look, you've got a long way to go. You've only just broke your macro head and shoulders on the Nasdaq Composite and the SPY. This, of course, is the minis future, which, by the way, hasn't opened positively. Crypto just very much following and in sync with it. I don't even think the FTSE opened positively today. But we're saying that, look, this is going lower. You've still got quite a bit to come down for your stock market. Your on-chain analytics, if that happens, goes straight out the window. What you think the on-chain is going to hold it when the macro backdrop is just, not supportive of that at all. And this is what I mean. Be very careful with on-chain analytics at the moment, because as somebody that's followed it, it's become less and less potent as time has gone on. And has actually become less and less accurate in terms of predicting what price may do at a set of criteria for on-chain analytics as things have progressed. So we're still looking at this downside. We'll switch to the 3-dayer because we had that death cross that we were looking at. I think that has indeed now happened or is happening. Ultimately, I think any rallies that occur during this environment are there to be shorted. We're going to short. We gave you a short setup yesterday. We didn't really get short ourselves because it wasn't the kind of setup that I was after. We put on, I think, some sort of like feeler shorts that I got tagged into. Didn't put them on particularly. I set and forget a lot of my trades, and then if they get tagged in, they get tagged in, and I'll look at a setup. That actually happened yesterday. But again, just to reiterate, guys, we still think we're coming down, and we are actively shorting quite a few altcoins, or not currently, but will be shorting quite a few altcoins. Sorry, guys. We'll be shorting quite a few altcoins. I still think altcoins have a long way to go. I'm looking at the likes of the Wall Street cheat sheet, and I can see a lot of these retracing, and some of them already have a lot of the moves that they've already previously made. I could see NEAR, for example, going back down to sort of $3. This is one that we're short. This was the sniper that pointed this one out. It's also an algorithmically backed, a stable coin protocol. Stable coin protocols are very much in the scopes at the moment, to say the least. Also, you got the likes of AVAX and a number of other things that we're going to be looking to short all of these, to be honest, when the opportunity presents itself. And that's largely going to depend on Bitcoin. So I'll drop down the timeframes for Bitcoin. This is a messy, messy chart. It's not as messy as my working off chart. But what we were essentially looking at yesterday, and what we'll do is actually just go down to the 1 hour so that we can put on some levels for you. We were looking at getting up here yesterday. We were down here and we said, look, what I'm envisioning is a push. The reason we weren't short yesterday or over the weekend was because we thought there was still more upside to come, given how things looked on Friday, and given how the market was kind of, the market tells you what it's, or gives you some feelers, if you will. So I thought this, and we spoke about this accumulation range on yesterday's video, Francis, was likely probable that we were going to get back here. We've got there and we've rejected off it, but we haven't rejected particularly as strongly as I thought we potentially would have. So diversion, you've come back down. Any intraday traders would have been trading this and they'd have been looking for the diversions. But I can still see, and we'll wait to see how the stock market opens. I think the stock market could be looking for a little bit more relief, given just how hardly, certainly the US stock market, we know that the FTSE's already started the day off rather negatively. Or it could have actually come back by now. Yeah, so the FTSE's, this is a 1 hourly chart, which is no use when you're looking at these indexes. Hasn't started the day off great. Started it down a lot worse. Has actually reclaimed a lot of that. But the likes of your S&P and your Nasdaq, if they open the day positively, look at Apple and everything else, then you're probably likely to see, more upside for crypto, at least on the short term. I think that gets killed off eventually, but I think, I still think that we could be continuing to the upside here, potentially. But we'll see what happens. But if, of course, we start to take out some of these prior lows, we will look to short it. But ultimately, again, to reiterate, rallies, I think, during this time period are there to be shorted. And that's kind of the play that we're certainly looking at and playing. So we've now got Powell coming out and saying he can't guarantee a soft landing as the Fed looks to control inflation. Inflation is the main topic. That's their main point of interest. I mean, we even had Joe Biden, I believe, talking about it. Rather strange tweet. This was a tweet from Joe. You want to bring down inflation? Let's make sure wealthiest corporations pay their fair share. I'm not sure how that would actually tackle inflation. But anyway, so, it's clearly the main talking point. And I think, the Fed are going to do what they're doing, at least till past the midterms. and that's a bleak outlook for market. Fed Chair Jerome Powell cautioned Thursday that getting inflation under control won't be easy. Nonetheless, we think there are pathways for us to get there, he said with an interview on Marketplace published Thursday. And this is going to be, we're going to listen to him talk on Wednesday. I'm going to be listening to that like a hawk, pardon the pun. But that's just to see really what you know, he's going to be setting the pace for markets moving forward. You've got the Asian stock market, didn't open great today. You've got the retail earnings coming out this week. Lots and lots of things coming out that are all going to be key data points moving forwards. FinTwitter is once again discounting a peak of inflation. The next CPI year on year will likely hit a new high as the cost of energy fuel keep increasing. They never learn. Yeah, so I actually believe that potentially, I agree with this individual's tweet. I think I retweeted it. If you're not already following me on Twitter, guys, head over to @RealAllinCrypto. It's well worth following me on there, guys, because you get a lot more timely updates. Just simply because it's a lot more easy for me to put an update out on there than it is on here. But essentially, I think inflation's actually going to come in hotter for the next CPI print. And I think that puts the fear of, you know, I think that really scares markets because even at an 8.3, when the prior one was 8.5, that's still really bad. And if we continue up higher, that means that the Fed, certainly if the stock market, you know, rallies into that, which I'm not saying it will, but it could do, that's going to give the Fed, you know, they're going to have to continue on the warpath that they're on in actual fact, depending on how much higher it is and how under control it becomes. You know, that 75 basis point may come into focus, and I think that would really scare markets. So everything for me is to the downside. Main takeaway, that is really all I've got for you in this video, guys. I'm going to love and leave you on that note. If you've enjoyed this content, a like is always appreciated. So is a comment. I know it's hard to like content that has a somewhat bearish short-term outlook, but guys, we're going to tell you exactly what we see on a day-to-day basis. You guys know that the only thing you're going to get from me is the truth, and that's all I've got for you guys. Thanks a lot for watching. Enjoy the rest of your Mondays.